All right, let's get right into it. You've probably seen the headlines about the tech giant Oracle. On one hand, they're cutting thousands of jobs, and on the other, they're pouring billions of dollars into a massive new project. Now, that sounds like a huge contradiction, right? But what if I told you it's all part of a single, incredibly high-stakes plan?
And that's really the million-dollar question we're digging into today. How can a company be shrinking and expanding at the exact same time? It's a puzzle for sure, and solving it gets right to the heart of the pressures shaping the entire tech industry right now.
So just look at this. Here are the two sides of Oracle's reality, right next to each other. On the left, you've got these painful cuts, all about slashing costs. And on the right, a colossal investment in the future. You'd think these belong to two totally different companies, but believe it or not, they are deeply strategically connected.
Okay, so let's start by just framing what's going on here. It really is a confusing situation, a classic business paradox. And to solve it, we need to look past the headlines and really understand the forces that are pushing Oracle into a corner.
Because, these moves aren't just happening in a vacuum. To get to the why behind all these layoffs, we have to start with the intense financial and competitive heat that Oracle is really feeling right now. So just how much pressure are we talking about here? Well, the numbers, they paint a pretty dramatic picture of a company that's facing a whole storm of challenges, all at once.
First off, check this out. A 25% drop in its stock price this year alone. That's not just a dip, that is a massive loss of confidence from the market. It's a huge red flag that signals some serious anxiety from investors about where the company is headed.
And then there's this. To fund its big ambitions, Oracle just raised a staggering $50 billion in new debt and equity. I mean, a number that big puts immense pressure on your cash flow. They absolutely have to show investors they can handle this new debt and make it pay off, and fast. So you see how this all comes together? It's basically a perfect storm. Cash flow is getting tight, bigger cloud rivals are breathing down their neck, the market is panicking that AI could make their core database business obsolete, and all that new debt is just looming over them. Oracle knew it had to make a big, bold move.
So, faced with all that pressure, what did Oracle do? Well, they're not retreating. Nope, they're doing the exact opposite. They are going all in, making a massive bet on artificial intelligence because they believe it's the only way to secure their future.
Now, to really grasp the scale of this bet, we've got to talk about a slightly wonky financial term. It's called RPO, but stick with me. It's actually pretty simple. Think of it like this. If you're a caterer, your RPO is all the weddings and parties you already have booked for the next couple of years. It's revenue that's already promised, and it's a great sign of how healthy your business is going to be. Okay, so what's Oracle's RPO? Get ready for this. It's a jaw-dropping $553 billion. This isn't just some forecast. This is contracted future business, mostly driven by huge demand for their new AI infrastructure, including a massive deal with OpenAI. It's a signal that the demand for what they're building is absolutely enormous.
And hey, you don't have to take my word for it. You can hear that confidence straight from Oracle's own leadership. The company's basically telling the market, look, we know the demand is real because we already have the contracts. Our only problem is building everything fast enough to keep up. Which brings us right to the final piece of the puzzle. We've seen the pressure they're under, and we've seen the massive bet they're making. Now let's connect the dots and see how the layoffs are literally the cost of funding this enormous gamble.
The logic here is actually brutally simple. Step 1. Building data centers that are powerful enough for modern AI is incredibly expensive. Step 2. Oracle needs cash, like right now, to pay for it all and calm down those nervous investors. And Step 3. Layoffs are one of the absolute fastest ways for a company this size to free up billions of dollars in cash.
And this isn't just a theory. An analysis from TD Cowen put some hard numbers to it. They estimate that cutting 20,000 to 30,000 jobs could generate $8 to $10 billion in extra free cash flow every single year. That's money that goes directly from payroll costs straight into funding the construction of those new AI data centers.
So, when you put it all together, the whole picture snaps into focus. The layoffs. They aren't a sign that the company is failing. They're a strategic, and yes, a painful, sacrifice. It's the calculated price Oracle is willing to pay to fund its massive, company-altering pivot into the future of AI. Which leaves us with the ultimate question. Oracle is pushing all of its chips to the center of the table. It's betting its entire future on becoming an AI powerhouse. It is, without a doubt, one of the biggest gambles in the tech world today.
and the only question left is, will it actually pay off?